Hey, this is Jeffrey with another edition of StockSmart, the December 21st. I guess this is the Christmas episode on the iBet Networks, here with special guest and options expert Joe Waterman. Hey, Joe, how you doing?
I'm doing great. Makes me laugh every time someone calls me an expert. I just laugh.
That's nice. Why don't you destroy your own credibility? It sounds like you've been married too. It sounds like you've been married too long. You know, usually let's let our significant others do that to us.
Yeah, right.
Yeah,
I do a good job on my own.
that's true. So hey, today was okay, so this is the day, right? We had the rebound day. Today's Tuesday. We're taping this on December 21st, after the market closes, actually. And we had a big move in the Dow. We had a big move in the NASDAQ, kind of like a relief rally. But again, to me, when you get these big moves, I think right away, I just think short covering.
Yeah.
I don't think... So this is the time of year, if you go traditionally back like 100 years. This is the Santa Claus rally, right? This week, if you buy for this week, you're going to make money. And, you know, today, you probably could have made 1.5%. You might make... So we lost about, 6%? I think we were oversold. So I think it's a double right here. So I look at RSI on the S&P 500. You can even check that too as a tool, but RSI on the S&P 500, you'd see it was oversold. So those are just technical bounces. Now, is this the Santa Claus rally, Joe? I'm not sure.
Might be the only one we get. You got to take it.
Like
Right?
the one day.
Yeah.
I know. I wrote some calls today just because I figured I'm hedging sort of the whole portfolio. Like, I don't want to lose any more this year. And so I just kind of hedged. You know, we talked about some of the things we've been doing, right? Did you have anything today that you saw in Awesome Calls? I know you told me, you know, the guy who you work with in Awesome Calls, or who's kind of the lead trader in that space, he kind of did not have any moves for overnight.
Yeah, so basically the way it works is he'll come in like towards the end of the day, right? And if he feels like the market, or I assume that if he feels that the market's going to be higher the next day, he'll take a look at possibly what's beat up, you know, and then do an overnight trade idea for that, where you could either long the stock or you could long a call, you know?
And so you're telling me what happened. What did he say today?
So today, he loved the fact that it was a rally, right? But he just wasn't confident that he could make overnight calls on it, because he thinks that we're probably going to see a sell-off. I don't know if it's going to be a large sell-off or a small sell-off, but kind of the same way that you're feeling. It's like, if you've already made your money, right, and you got everything, why are you going to get into this market right now?
Well, that's why I don't think there's a lot of new positions being entered into, and I think what you have is there's some trading going on, but I don't think, if you look at the volume levels, that it's normally that it's where it normally would be right now, because I think people think, hey, they made their money, you're going to get some tax relief selling, other random selling, but there's no need really for people who have made 20%. If I'm a fund manager and I'm sitting in there with a 20% gain, I know that I'm keeping that account.
Right.
You know, if I was...
And the interesting thing about a rally too is it takes a lot of buying, right? Like a sell-off doesn't need to have a lot of volume, you know, it's just lack of buying, right? But it takes a lot of buying to push a stock higher.
Right. And so if you look at like today, we didn't get quite oversold. Like, when I look at oversold, I like to go down to like 30. We got to like 40. And then today we had a good rally where we got back up to 50, which is really neutral. And so we did have a lot of buying, but I wonder how much of this buying was short coverage. So let me look at a sector I follow, and you know when we're going to talk about, right? We're going to talk about sports and gambling, because that sector's gotten decimated, right? So let's go through those stocks. And you're telling me that these weren't short covers, because look at these numbers. If I break down some of the top, you know, gambling stocks, skills, okay? Now, Miss Kathy Wood has a lot of that. That thing was up 11% today. 11%? Are you serious? I mean, that's ridiculous, that kind of move. So to me, that I know is a shorted stock. That thing was short covered. Bally's, I love Bally's. I read a bunch of things about the CEO. We talked about it last week. Bally's is bidding to build $1 billion casino on the lakefront here in Chicago. I'm actually in Chicago, Joe. I don't know if I told you that.
Yeah, did you see where they're doing it?
Well, it's, you know, we don't know that it's going to win
yet.
yet. You know, they're starting to try to build good faith and goodwill in the Chicago area. They're running commercials, but we're not sure if that's going to happen yet. So Bally's today, I like this stock, by the way. I think it's really interesting, but ticker symbol BALY.
Stockwatch.
Has a lot of, you know, they have a lot of, the whole thing about this gambling stocks too is like they're tied to COVID, but it's just silly. It's not, it's all digital. Michigan announced last week, they had their numbers for November. They did 500 million in bets in November in Michigan alone. Now, isn't that crazy?
Right.
So look at these stocks. Caesars, CZR, up 9% today.
Yeah.
Penn National Gaming up 8%. DraftKings up almost 9%. Las Vegas Sands up 8.5%. Golden Nugget Online Gaming 8%. IGT Gaming 7%. I mean, all these stocks went up bananas. And so you know that they're short covering these. They were relief stocks, probably shorted to death because they get shorted on the new COVID variant, on Omicron. And so these things were all probably getting, they probably made some money in the shorts because these things have been getting hammered. I mean, these things are down 15, 20% since Omicron.
Yeah.
So they're individually shorted. So they probably had some relief rallies. Now I think a lot of the market, we see some others. We talked about Ambarella. Ambarella had that kind of move. Now, did you look at my stock? I talked to you about a stock yesterday, and I think you were in a little bit.
Oh, yeah, that QDEL? Is that what it was?
Yeah.
Yeah.
So, I don't know if that's the right pronunciation of the company, but it's ticker symbol Q. Do you know if it?
I have no idea.
Right. So Q.
I have no idea what it does or what it is.
Well, and I told you really quickly. I said, take a look at this stock. It had a huge move, right? This thing has moved massively since like in the last week. I mean, it's had like a 25-30% movement.
In the last 5 days, it had a 138 low, actually 137.81 low, and it had a high of 182.5.
Right. And so what they kind of had an announcement. They said, hey, Q3 revenue to be 505 million to 510 million range. So this company actually is one of the leaders in the COVID testing. So you would think if you were interested in this company, this might be a good long-term play. Now this thing went. Did you look at a chart on this? Because I know you're doing a lot of other things today. I'm not sure if you had time to chart this one.
That's the only thing. That's the only kind of, when you sent me that text, I didn't know anything about it. So I just try to learn what I'm using in awesome calls and apply it to this.
Yeah, and Joe and I will have a tendency, sometimes we'll talk about stuff and I'll say, hey, do you see anything going on with this one? And so I saw like QDEL, that thing is at 254 it went up to at one point in early February. And that again would have been a key testing period, right? So that's when this started building up. Then it went down, it pretty much halved itself and went down to 120 again. Now it's building momentum again. And as we got the COVID variant kind of warning, the Omicron, kind of was looking for some, it was going sideways for a bit, and now it's taken off because all you hear on TV right now is how they're running out of tests.
Yeah.
So I took a dive, but I think it was too late. I'm going to hold on to it and just cross my fingers. All right. But I took an option play on this. Now, did you get in? Did you take an option on this, Joe?
No, I actually just shorted the stock. I shorted 100 shares of the stock because I didn't know anything about it, but I was just testing what I've been learning.
And you were seeing like that. You saw that you thought it just went too far too fast.
Yeah, well, so the way that I've been taught, right, or the way that I think that they're teaching me is it's something called a box method, where you look at like where the stock is and you kind of draw like two lines that would be the support and the resistance that you might be familiar with, right? And if it breaks support or resistance, then you enter the trade, right? So I drew my lines from the previous day at around 177 and 173. And the reason why I picked the 173 was because the prior day had a gap from 163 to 166 about. And so I thought if it could break the support line of 173, then it might have a shot to fill in that 4 or 5 point gap down to 160. And it did fail to 160.79.
Well, interesting. And let me tell you, this is a good way. I think this is an interesting technique too. So your technique's really interesting. Then I think if you throw, let's say if you're going to throw multitude. So like I love comparing, especially talk about corollaries. I always love throwing multiple charts on each other. So you can see inverse correlated. You can see positively correlated. Again, are you looking at all at Bitcoin as a barometer for the morning?
I'm not, but if I was going to trade Coinbase, I would.
Okay, but I would just say
that would influence.
But it is positively correlated to the S&P 500 mostly. I wouldn't say it's 100%.
I would agree with it. I mean, just because, and the reason why I think it is because all those like junkies need somewhere to go when the market closes.
Right, so they're affecting.
They go to Bitcoin.
Right, they're affecting it. So when you look at it, I think it's one of the better futures. I mean, I look at the futures too, but I don't always trust the futures as much as I trust the Bitcoin now as one of the futures, as one of the indicators. So when I've been looking at it again, so I knew like today, I looked at Bitcoin and I noticed Bitcoin was having one of its best afternoons yesterday. So it made a big move yesterday. And I'll tell you, I was down 15%. And now I'm only down 10%. And so that moved 5% yesterday. So when you look at it, you can see that same kind of move. So I saw the move in Bitcoin as well before, and then the market had its big day. So you wonder if that's a good barometer, and I think it is.
I definitely, and it doesn't matter really what makes it a good barometer, but I do think people like at work want to learn how to trade, and people that do trade want to keep trading when the market closes. So I think there's a lot, it's like a learning tool probably for a lot of people that want to get in the market is this cryptocurrency, especially the younger generation, because the younger generation, doesn't want to do things the way the older generation's doing it right now, I think.
Totally. Now, one thing I didn't do, so on QDEL, QDEL, and I think really if you would have layered over that, and that was kind of what I was trying to say, if you would have layered over not only what you saw in your box method, which I do want to, and probably when we get back from Christmas, I'm going to be back. I just kind of perfected this thing we're going to use. We're going to use this technology called StreamYard or something like that, and we'll be able to pull up some graphics, so that'll be a little bit cooler. But I think you can see that QDEL was overbought at that point. So I think you timed it perfectly, and it had gone to this overbought level several times. If you look at it over the past year, it's hit this 1, 2, 3, 4, 5, 6, 7 times it got to this number overbought. So it hit 70 on the RSI and then bounced and took a break. And that's essentially where it's done it every time. It's been so consistent. This one is like perfectly consistent. It's hard to even see one that's this clear. Generally it takes a break. We don't know if it's going to cool off now for the year or if it's just going to take another day break and maybe rebound. And this thing will rebound just pretty much on the Omicron.
Yep. If I was going to enter this trade, I would not enter the upside until about 172.
Oh, so you're looking at 172. So
you're
looking at that as kind of like a resistance level?
Well, I think if it would, because it's trading 167, let's say right now, and just when I look at the chart, I don't really care about the chart until it proves to me that it can go up to about 172. And if it proves to me it can go to 172, especially with volume, then that would really sell me into entering the trade long and trying to get a new high of 182.5 or something like that would be where I'd look to get out of it.
So that's an interesting point. So when you look at this, today it was a weird day. I always think it's strange does it make sense to you that we get the rising yield and then we get the market rising as well? Does that make sense?
So the rise in yield would be interest rates going higher, right?
Right.
Just so I'm making sure we're on the same page, right?
Yeah.
And so if interest rates are going higher, so I guess maybe in the short term it might make sense just because that means that the economy is doing well enough that they can raise interest rates, right?
Yeah, that's sort of the thing. But overall, as they continue to go up, it doesn't make sense.
It's going to kill the economy, right? And
right.
So
yeah, go on.
I think you can hold. I think you can trade that for a few days or a few weeks or whatever, but eventually that rising of interest rates is going to kill the growth in the market. And what the tech people I think feel is that the innovations that are created are going to make enough supply available that we don't have inflation. And that's a bet that they're willing to make and that they're telling experts, but I don't think it's ever been done in history, And if one country can do it, maybe the U.S. can do it, right?
But that's a really complex argument. So I mean, how many different things are involved there? Because you're talking about being efficient enough to where you reduce labor costs, right? And then and supply chain issues.
So yeah, and the supply chain is the one caveat here that even if we have massive demand, right, we're gonna have tons of money and limited supply, and so that's just a recipe for massive inflation, right?
Yeah, and I talked and I think
go ahead.
From what I'm seeing anyway on the supply chain, I talked to a guy he has a company where they get a lot of things from Vietnam, China. He has a company in San Francisco, downtown San Francisco. It's called Rourke, and they make outdoor sportswear kind of stuff, heavy duty kind of adventure kind of wear. And he's just telling me they have the same problems. So why wouldn't their same problems be the same problems everyone else is having? I know, Amazon has more, they have more leverage and they can pull more,
right,
and get more things done.
Or Walmart just hires the ships themselves, right?
Yeah, well, they have to. I mean, UPS is doing the same thing. They just bought 10 new airplanes.
Right.
So, but the thing is that the supply chain is the same for everyone. I mean, you can't make it's sort of like Santa's toy shop. I mean, there's only so many toys that Santa can make.
Yeah.
And I think they're all running into the same problems. I mean, yeah, efficiency, but we're looking at what 2 or 3 years down the road.
Yeah, I mean, we're playing a game of musical. It's like I think we're playing a game of musical chairs right now, and it's fun. It's the Roaring Twenties. We've gone from before the election, it was like 30. God, was it? I think it was around 3,700 during the election, and we're at 4,700. Right. So this is the Roaring Twenties, even if you're not participating in it, right?
For sure.
The listener, and when the music stops, like this thing is. I actually heard Leo Cooperman. What is it? Omega. I think I'm not sure who he's with.
Well, he's kind of retired now. He has a family office. It's like Omega Family Office or something like that. But he has he's retired. He had a bigger practice, and now he has just a small family office now, pretty much.
Okay, cool. But he was saying that the SPX fair value, and this is like maybe a week ago, he was thinking fair value in the SPX was around 4,100, and the way he was coming to that number was the yearly expected SPX earnings he was using 230, and he was using an SPX multiple of 18, which got him to pretty close to 4,100. And I think the SPX is at a 21 or a 23 multiple, if I remember the conversation correctly, right?
Mm-hmm.
And so that's how and I think that was just a great way for the listener to start thinking about the market is Google SPX, earnings, right? Find out what that number is and then multiply it by what you think the correct multiplier is. And 18 being like a historically maybe high, right? Is it more like around 16 to 18?
Yeah, around 16 to 18 for sure.
Yeah, and that would be like maybe a historical number, and then find out where we're trading now. And then when these earnings come in, if we see them guiding down or in line, it's not going to be enough to support this.
Well, I think again though, come on, why do we? I don't know if that's what we all use.
Okay.
But no, but this is my opinion. So people pay, if you just said NASDAQ, right? You would know you'd be paying more for growth stocks. Right? So the multiple's higher.
Yeah.
Now, when we talk about 30% of the S&P 500 being those growth stocks, those 10 to 12 stocks, why shouldn't the multiple be higher?
Yeah, and it should be.
And so let's take those 10 out. I wish I had the calculation. I bet the calculation without those 10 stocks is like 20.
It's like 12.
No, it might be 12. You're right. So then really isn't the value there? So if you're looking at next year, yeah, I think that people want to be in stocks. There's a lot of stocks out there that are like 6 PE and 10. They're insurance companies. They're like Allstate, stuff like that. They're out there. People want to be into the banks. I mean, we talked about it. The best play, I think the best thing you said last time we were on, talking about, because we were talking about what would be your positioning into inflation plus interest rate increases, and you made the best call, and it's really like something like the XLF.
LXF, yeah.
Which is the financial sector ETF, and that thing could probably make 30-40% next year.
Well, and then especially, and so now this is like, since we're an ETF show, right?
Yeah, we talk a lot about ETFs. Absolutely.
So then you could, if you wanted to hold it for a long time, you could hold the XLF, right?
And for full disclosure, we do have that. I have that in my client accounts.
Okay, and then if you were maybe going to hold something for a week or two because you had a suspicion, I'm sure there's like a levered bank fund that I don't know the ticker offhand, but like you could hold those levered securities for a short period of time. I wouldn't hold them for a long period of time. I've got, I think, an example of that might be like in the semiconductor, the SOX.
SOX, yeah.
SOXX.
Yes. Yep.
And then there's the SOXL, right? So if I'm trading NVIDIA, right, and I see NVIDIA pop, I think in the SOXL, NVIDIA represents about 20% of that ETF, and it's levered.
Right.
Right? So then if I see NVIDIA pop, I could buy the stocks, right? Or I could buy the SOXL and get the bump. But I wouldn't buy that levered security if you're going to hold on to it for a long period of time. And the reason why is the way they get that leverage in security, I imagine, is they have to use derivatives, and derivatives are going to decay over time. And it's called something like it's a daily net weighted, or I forget the terminology, but you're basically paying theta to hold that thing. Because
so you're talking about, so this actually is,
day.
no, but this is a really fundamental kind of interesting. So in those structures, those leverage structures, they're using a lot of what they're doing, a lot of call options, or they're doing, what are they doing?
You know, I've never traded them, but I would imagine that's the only way they're getting leverage is by buying some calls. You know, they're probably buying the stock 1 for 1 and then buying some calls, and you know, to pay to make sure the asset value is rising fast enough.
Right, that makes sense.
And but I think they have to rebalance that on a daily, I think. And so every time they rebalance that, that's more fees, right? And since they're doing it with options, there's probably a lot of decay, right? So if you're going to hold those leveraged securities for a long period of time, the smarter people in me in the trading room, when they taught it to me like 20 years ago, they're like, you don't hold it for a long period of time. You'll never make money, right? Because you're not going to overcome the expenses that are associated with it.
Withholding
but yeah, but if you think the move could happen in a short period of time, they might be a good security to use, you know, because you'll get the move that you want without the decay.
Really? That's pretty interesting. Actually, we should look that up because now I'm kind of curious what that would be.
Cool.
But that's
I mean, but I know, I mean, and I'm talking like the interesting thing about like, I had this, you know, like when I think they call us, it's like Zennials or whatever, but we're analog and we're digital, right? And because when we grew up with the internet, but not with social media and other things. So we understand the digital world, but we might not be masters of it. But we still understand the analog world, right? Where the rotary phones and stuff like that, right?
Right.
Well, the digital people don't really understand the analog, but like we're this like Rosetta Stone where we can kind of get both. Like I forget what the demographics are, probably like 70s to 80s or something like that, 1970s and 1980s, right?
Right.
And then, and like my time in trading was similar because the floors were being shut down and electronic trading was starting to flourish. And it just happened that ETFs were starting to flourish at the same time, right? And so I had a decent amount of exposure with State Street and the ETFs through the Spider because we were trading the S&P 500, the SPX, the NASDAQ. And so we were trading Qs and Spiders against it in like 2004, or even 2000 to 2004. I remember one time with the Spider, they were giving us a hard to borrow charge on the Spider, like, which is ridiculous. It's got to be like probably one of the most heavily traded securities ever, right? And I'm guessing at that, but we had to do it's called a redemption or a creation, right?
Right.
Can either, and so we had to do.
You are listening to the Weekly Wager, the NFL edition with the Doctor and Uncle B.
Paying the fee, we just went out and bought the 500 stock and gave it to State Street.
How you doing, Doctor? We already had some of those
Thursday
games, so we got a short week this week.
So we just bought some interesting action. We had the Bears and the Lions, and the correct share amount.
The way I saw it, the Lions ended up push. There was a push for me.
Take off the hard to borrow.
The Bears prevailing 16-14. We had an interesting
short position. Does that make sense? Or is that
totally? Yeah, totally makes sense. It is where it ended up being a high-scoring game. I did some digging while you were explaining that. Buffalo New Orleans game where Buffalo walked away. Let's take out those 10 stocks, and I don't have the number, but I have an older kind of chart from like 2020. Weekly Wager in the NFL.
And
this is the one thing I say.
So like Liam
Cooper, genius guy,
some interesting
great
games.
investor.
What do you think of the Thursday games?
All-time greats. Actually, a great humanitarian.
Well, you know what? I hope Sunday plays out the same way.
I would say when you look at it, so if you go to the 490, so you take out those 10, go to 490, and you have a significantly different S&P 500, one that's only up about 5 or 6%.
How good are they? Were at the
okay,
point,
and then
I had heard somebody else that got two and got a push. Is that what happened? You got two on it and got a push?
Right, that's going to tear the S&P 500 down. Before it came out, they started off really well, and I was looking. So I don't even think the S&P like. I don't even think, and I'm looking at the equal weight. The equal weight is up almost the same. So I don't think the equal weight even works. I think what works better is taking those guys
we're
out.
Still waiting for that announcement to see if Nagy gets canned.
What does that mean? I'm sorry, I lost
pretty
well. I'm just saying, if you go to like a value ETF,
top 10,
take those 10 out because those guys ended up. So if you look at the S&P 500, and I'm going to get this, I swear, by the next show, I'm going to put this together because I want to have this data, or I will find it a chart of what it is because I want to know what the numbers are. And if you take those 10 out, we're talking about big movers like Tesla.
Schedule.
Did we get any? Google's been awesome this year. Microsoft's been crazy this year. Apple's been crazy this year. All those have been good. The one that hasn't been that great is Amazon.
Tennessee, New England. We're going to talk
Facebook's
about Pittsburgh,
been good.
Cincinnati.
Tesla's
Bay,
been. I mean, all those big
Minnesota,
stocks have
San
moved
Francisco,
a lot.
LA Rams, and Green Bay. Very
you take those out, and you have stuff like
injury things we can talk about in that game. Cleveland and Baltimore, and that's the last one we're going to cover.
Well, all I'm saying, and not to discredit the genius Leon Cooperman, but I'm just saying, when he was doing this every day, that S&P 500 didn't have those kind of companies that were dominating. That was back in the day when
Tennessee,
it was 10% of the S&P 500 was oil,
or
maybe more. At one point, it was 20. So now you have 10 stocks, 30%. I wonder if in the history, and I don't have the history on it, but I wonder in the history, has it ever been such one group of companies that dominated 30%?
We discussed the story seemed
and what does that really say about it?
I heard it even again Thursday.
I don't think it's that great, actually. And I think if you take, the price to earnings here, value here is on the rest of the stocks. I think those 10 stocks create this overvalued concept of it, but those other 490, I think probably are just okay. So if you look at some of them, like look at Coke. That was one that that was a dogs of the Dow. Actually, that concept, dogs of the Dow.
Hearing a story.
It's not even around anymore.
They don't talk about it.
Well, I think they changed it or something, but it was the highest paying stocks in the Dow.
Well, it was just that if you took them and the worst performing ones were the ones you wanted to be in the next year, and it had some kind of return that beat the S&P. Now, like Coca-Cola was one last year. I can't remember. There's those 30 stocks, so you'd have to look at which ones. But like Coca-Cola was one.
Well, I think
last year,
let's talk about a couple of these injury things.
So on the year,
are playing
what's
a big
Coke
factor in the NFL?
It's made about 9%.
Tennessee's looking at,
so it's not. That's the normal return.
But they're back.
So what I'm saying really is, if you take out those other stocks, you look at some of these other ones that are known, like 3M.
Jones, who really has done nothing this year. He's on IR.
I don't know. Do you look at 3M ever?
They have 5-6 guys who are in their starting.
That's a loser. That thing's flat. That's flat to down on the
New England,
but they have a ton of lawsuits.
Minor
so who knows what,
they have some injuries at running back.
Somebody like J&J. J&J is one of the bigger companies in the
and then a couple injuries on defense.
Their market cap is still much 450.
So what do you think?
They're on the year in this one. They're 9. That's normal.
I'm a firm believer.
Right? If you're going to go like your grandmother, like if you went back to 100 years ago and you would say, "What's the return in the S&P 500?" You ask somebody and they'd say, "I expect to make 8%."
We see a game that opened at 2.5.
So Coca-Cola
now all the way up to 7
and J&J, they made around 9.
And
the normal number.
People are starting to adjust.
Amazon. Let's look at the Amazon because I don't think that's done that well. Amazon
of New
is
England.
6. Now let's go to big boy Apple.
If we had opportunity of betting
35.
this game, it was at 3. We missed the 3.
So what's really doing
we missed
this?
the 6.
It's just
now
the
we're
big
playing
ones,
at 7. I
look
really
at Google.
like
Google's
New England.
been huge
Jeffrey,
this year. I bet Google's in that same range.
No,
Google's 65% this year.
Now that we're at 7,
so you take that with a market weight it has.
No play for me.
Well, so the point is, I'm not so sure
on the show we did on Wednesday.
If you
took those 10 out,
the Raiders became much
and technology is positioned well for a pandemic.
It always is. I'm just saying if people are going to look at it.
No, all I'm saying is,
and the other thing is, there's not that much of a differentiation between
and I think
the triple Qs and the S&P 500.
There's a discipline to this, right?
Right.
The return's the same. I think the triple Qs is just a little bit better.
Say,
and that's a
strong play that I would
probably
believe wholeheartedly
has done that on
is
purpose,
that Bill Belichick does not
because they're
lose this game
competing
at home
for those orders,
okay?
Right? And
which means we have to do one of two things: either we have to get involved in a teaser, or some sort of parlay on the money line, or we have to lay a tremendous amount of
there was a
wood
guy
to get $100
a long time ago.
return.
His name was Dow Jones.
And
that's a real guy. People don't even know that's a real guy. So there was a guy, and I think we're going to have to call this one.
I just kind of lay it out that way so that
right.
Folks,
because that's what I'm going to put it together. I'll create the little algorithm I need to put it together, and I'll pull it off, and I'm going to have this 490.
They're well coached,
and I'll have the price earnings on the 490 minus the 10.
Potentially,
and then the 10 could be their own little place, and we'll call it the Jeffrey
They've been
Camus.
rolling. They've been hot.
Because I think that's your barometer.
That's a tough game.
I think if you take those other guys out, and even people want to be in the SPY. I mean,
so let's go to Uncle B. Let's look at the monster. Might as well talk about Belichick. Let's talk about his old quarterback.
But I'm just saying, is it the right barometer? Just like people. Traders are like, well, we don't use the Dow anymore.
7-3 looked a little bit better, but
it's still there. But it's an old,
not really sure there.
It's an old tool, and maybe the
SP
500, maybe that's an old tool
against Tampa Bay. What do you say?
Right, or another way that.
But do you know what's cool about this show? And I'm sorry, I didn't mean to interrupt you. What's cool is they don't talk about shit like this on like CNBC.
They're playing well. They're balanced. Same thing that
But I think that's kind of cool because I think this is where we're thinking a little bit different.
They can stop the run, but they can also run the ball.
And the other way.
And so now we got two teams matching up against each other. I feel as if Indianapolis is a good play, but they're coming off of such a high-scoring game at Buffalo, and they're playing against Tom Brady, who I don't like to go against. So it's a difficult game here. You're getting 3.
Amazon might be an expensive
I'm looking at Tampa Bay's injury-wise. Tampa Bay has some injuries to some of these key players. I mean, Mike Evans questionable.
I think it's 10. I mean,
you have a couple starters on defense who are questionable.
One or two of those,
Pierre
that might
Paul,
give you pretty
Devin
good
White,
insurance.
and Vitae. And so you do have some questions on health for them. Indianapolis looks like a much healthier team now getting back.
Yeah, but I don't know. Could you do that, or would you just buy
much healthier going?
Could you buy the? Could you short the triple Qs?
Is this one an avoid too?
Well, see, the only thing that I was going to assume that might happen.
I get tentative playing against somebody like Tom Brady.
There's
right, because he's one of those guys like the Weasel.
Like 300 of those stocks.
Yeah, Aaron Rodgers, who if he gets the ball at the end of the game, he's going to have a chance in a close spread like that.
They're going to be in a higher straight environment.
But I think the way to go on.
And so I'm just saying, like,
and I also I like what Indianapolis has done, but I'm leery of teams that blow out against the spread the following week.
Might be
but I will take Indianapolis
maybe
plus
all,
the 3 points at home.
Right?
I think they're a good enough team to win outright, and I'm getting 3 points at home. So that'll be one of the plays. Indy plus 3.
Any combination of that.
So what do you think about the Pittsburgh-Cincinnati Bengals matchup? Very good.
Like, maybe
divisional
you can make
kind of game here. We have the 5-4 Steelers against the 6-4 Bengals. Cincinnati 3.5
Did we just create something?
Favorites. They're both. Neither of these teams are really dominant against the spread.
I mean, the Qs is an easier way to do it, right?
Well, that's what I think because it is so much. It's so much Facebook, Microsoft, Apple,
Pittsburgh looks
Amazon,
relatively healthy,
and all those companies. It's so much
relatively healthy as well. So not as much of a factor there. This is just one of those games that usually plays out pretty close.
And all those things are changing too because
on any given Sunday.
I like this game. I like divisional matchups.
What comes with Bitcoin?
We're still getting more than a field goal with Pittsburgh.
Decentralized
I
finance
think public perception is more that Cincinnati is better than Pittsburgh. I think folks are not that high.
Probably the regional carriers too.
I see well-coached teams as we get down into November, December. This starts to fit into the mode of Pittsburgh. And I think you also notice as we dive into the numbers, we have some
LA's got 2 teams now.
Some interesting statistics on Roethlisberger.
So look at this. So this is my favorite way to get into this, right? Okay, it's simple. Okay, so you look at the S&P 500
in the state of Ohio,
and that's returned.
He has a tremendous record winning straight up, and he also has a tremendous record against the spread.
So the SPY is green on here.
I think he hasn't covered against the spread maybe once or twice out of 9 or 10 games.
And this is your number.
So he likes heading back for some home cooking.
They're like the same. I mean, if you look at them, they're like the same.
He's going to get more than 3 points here. We've got a defense.
They're both around 24, 25.
We've got a veteran quarterback in a divisional
So what does that tell you?
It tells you more than a field goal.
It tells you that the S&P 500 is not
see in
right
a little bit
anymore,
if that's
what it tells me.
B's,
the triple Qs is right because that's what it is. The
S&P
500 is just the triple
Qs. Thinking about the Minnesota and San Francisco game, so Minnesota actually now pretty interesting. Came through strong against.
Well, that's right because it's not. Yeah, it's not in there.
Both
right.
These teams relatively healthy. Will have pretty much the full core, a little bit dinged up.
But that's what they are for the year. They're the same.
But most of their guys
that's
are
really
healthy on both
interesting
sides
to
of the
me,
ball
right?
in this
So
game.
the S&P 500 is not what you want, and I don't even think it's the RSP. I was looking at the equal weight, which is the RSP. I've had clients in that before, but that returns almost the same. So I'm going to look at that and say I don't think that's actually right.
Pretty much must-win situation.
Why don't we just call it the
490? Their recent schedule, and then I also see a team in San Francisco
and then we'll get the return. But I'm going to do some. I'm going to actually back test that.
Missing a couple of things. They're well coached, and so if we take a short
and figure out what all that crap is, that's a lot of work. Where's my admin? Where's my crack staff?
Something similar to what we've seen with New England, but New England's a couple of games more down the road on that. And then I really avoid teams that are coming out of a divisional matchup where they won as an underdog at home. So that was a big-time win for Minnesota. It's important division. They've won 2 big games. They go back out on the road to the West Coast, and they're playing the San Fran team that seems to be putting things together, and they will run it. They showed us that against the Rams. Right down your throat, play physical. The money seems to be on Minnesota. So I like San Fran at home here to cover that number.
You know, now that Jimmy G is healthy, they've got some weeks under there. That team looks pretty good. They have a lot
what
of
are we really talking
about?
What are we really talking about anyway?
Last few games.
But so what are we going to call the new index? That's what I have to figure out.
Could be a little bit better.
The Camus?
Let's head next to another division.
What if we have like
another kind of
Kramer like referring to it
game, Cleveland at Baltimore.
Last
week we had the late news on
Kramer on CNBC. He'd be like talking
about
it.
He got COVID.
Oh yeah, he got COVID. Actually, I like Faber. He's
quickly, but we have
and the guy that's on it really
has always
Sullivan.
often injured right now.
He looks like a guy you like drink a beer with.
But seems to be
cool.
I'm just laughing because Kramer is talking about national vaccine
mandates. This is
mandates,
kind of similar comment
right?
that we made about the Raiders, right? It looked as if maybe the Raiders just needed
the COVID. I think it's okay, but I think it's right. I think it's okay though. I think just let's get it. Let's stop wearing the mask. Let's just get it. Take the shots. Yeah, let's just get it. Let's get herd immunity by getting it.
Roethlisberger and
well, they don't talk about immunity. Here's another one. It doesn't factor in yet. That's why
we have a divisional team that's been getting beat.
I got the shot.
Their big brother
I'm waiting on the booster.
Right?
So
me too. I can't get it yet.
In a revenge
I'm just
spot.
Gonna wait until they start
on the road.
Immunity.
They've been getting beat up by the public.
I'm not putting
and
stuff in my body.
Here's the thing. Just get it.
I actually want to see
get it and rally. And I'm not saying that's like irresponsible.
But they don't care. You still have to get the shot.
Yeah, I don't know.
That's my point.
Yeah.
Like you can get it, but if they mandate a shot, they don't.
In my favor. And at the end of the day, Baltimore comes down to their quarterback.
More durable than
so you'll notice as we look at Baltimore scores, and we look back on their games, how many games has Lamar won for them?
Right?
And how close are those games?
Well,
if I can go through them right now.
They're super competitive and super close most of their games.
Yes, they are, and they need him to do it.
And they don't even discuss it.
Right?
Absolutely.
Yeah, totally.
He's like Superman for that team.
It doesn't feel like it's on the
up and it's darn near every other game. You see 17-19, then the next week 23-7, then you see a 25-31, then 34-6.
Maybe next week he'll
then you see a 34-31, then 10-22, then a 16-13.
It's okay.
Oh no, they played a lot of close games.
Hey, let's take a question.
And then Cleveland can run the football,
and it's from Rick Santelli.
So. If we also look at the angle, I just don't feel as if.
But we've been talking about this. I'm laughing now when I hear this is again. Remember how you told me a couple of weeks ago? You said you're always early.
Similar to the Raiders in that spot.
Or your failures. And I'm saying the same thing. It's like with these bonds, right?
Thursday's pregame.
We know the Fed said,
"Hey,
we are going to stop buying." Right? So it's about 40 million less. That's about 10 million in mortgage-backed securities.
Points in a divisional game where they know someone well. And get ready for a fist fight.
It's a million. It's 10 billion and 30 billion.
Most of the money on this game right now is
in
the next couple of Baltimore, by the way.
61%.
No, it's 120 billion.
That probably makes it.
So anyway, so they're going to do about 30-40 billion less over the next couple weeks. So we're looking potentially for yields to go up. But we saw yields actually negative in Europe. There were some yields that moved like 20 basis points in the last 3 days.
Green Bay getting 1 point.
So, but that's good. That's good for. We need those. If we want, if yields go up here, right? So if our interest rates yields go up here, they will have to go up there.
They're 9-2
because we can't just have ours go up. Yeah, because they just can't. We just can't keep having ours go up. They won't. Because they're going to get pushed down by people by buying, right, from foreign investment.
Well, people are
Green Bay getting a point at home, probably because of the Rodgers, which is not a COVID toe. It's not even listed as a designation on the injury report. Though
we'd be retired.
If
we were bond traders, we'd be retired.
We also have Aaron Jones potentially coming back. And you see that Dylan may be great, but I think the strength of that running game is when they have the versatility of both backs.
But that's what'll keep them down until world rates go up. Ours can't go up that much. But still, the way to play this is like a hedge, not hedge, but the way to play it again is that
offensively, where they going?
That instrument that's kind of a short of the
recent weeks,
the older bonds.
And
when you get the newer bonds that are, the newer bonds will be more valuable.
The Rams
that's kind of what's going on in play there. It's kind of a complicated or complex instrument.
So what are you seeing in this game?
I would
Uncle B, because I have my own ideas, but LA Rams at Green Bay certainly going to be a great game. 1:25 start in the afternoon for the Pacific Coasters here. But a great game. This is a big game for Green Bay because 8-4 changes a lot of things around. They're only
there's like a cheapest to deliver
half a game behind Arizona
with
and
the head-to-head
some bonds
win.
are expensive.
So what do you see here, Uncle B?
I believe.
Yeah, I get the same feeling on this game as I did Harbaugh.
And so you're trying to deliver
it kind of draws me into one direction, and I never liked that. Right?
Because if you're short,
if you look at this spread, ultimately what you're telling me when they drop this number
bonds rally, right?
is that there's a 50% chance that Aaron Rodgers can lose this game at home. And I find that really hard to believe. Now where we come into a dilemma. Anytime I find myself in a situation where I don't want to believe a number, that's when we need to pause, take a step back, and say, okay, what's going on here, right? Because of everything that you just said, dead on. I cannot disagree whatsoever.
But you'd have to
why in the
deliver
world
another bond, and
is someone telling me that Rodgers has a 50% shot of losing this game, and on top of that, from the opening
so when
line,
we look at this,
and this is 15-year, like I know I'm not doing the best. I'm giving
and let's remember this is in LA.
So when we look at the
10-year,
so the reason I said it was Rick Santeller is because I was watching him, and he gave the bond market, the bond rally today an A+. Which I haven't seen a lot. I haven't seen that a lot college games in the bonds.
Do you know what kind of footwear
the kids are?
Yeah,
he wears cowboy boots. It's crazy.
You have an LA
they're not
team
allowed
that's
in Chicago for the most part, but I guess there's some Cowboys
75, 80-degree weather. They're going to go to Green Bay, where now we're sub.
I'm going to go down
sub freezing. Going to be 34 at game time, but you know how
anyway. So
it's got to be easy to spot.
Any place in the Midwest. I lived in the Midwest for years. The weather.
Hey, get over here!
And we might get some snow.
So look at it's at a key level. The 10-year. I think if it goes above 1.5,
teams go in there.
Which we're only like 30, 40 basis, 3 or 4 basis points away.
And the opposing
that's
teams
a number where you
could
see it really take off then.
I want to go back to like 30 years ago when Barry Sanders played
interesting to see the end of
the
the
Packers
year.
In a playoff game.
So if we don't get that
like
rally and we get the rally in yields,
I don't know if they ice the field, but it sure
I wonder if we
like
can get those two things to happen.
So
that's how they should move, right?
We
don't know if we're going to get that today. We got like the
definitely the home field advantage.
Green Bay equities moving up, which doesn't make sense
regularly at home. One of the best home field.
But if we get this yield up above, and it's holding now because it's in the after hours trading, it's holding at about 4 basis points right now.
I can't get past the spread.
Getting close to 5 on the day.
But
if we get that to about 5, 1.5, that's a key number.
Based on the story that the picture that we just painted,
that's a key number where you can see it go a little bit higher. That looks like it's resistance.
And they're not.
I would think if there's no word of the Rodgers injury again. Rodgers poking fun in the media. They said something about
we're going to see 3 rate increases next year. That's what they're saying. Now that might be
that
might be.
Really
I think that seems aggressive.
I guess.
I think 2.
I have a sprain, and I want to tell you this.
We'll see what they're feeling.
I have a sprained toe.
I mean, they're going to pace it to the economy and pace it to Omicron.
I think he can play with it.
Some worse
they can do a lot of different things with shoes. I don't think this line's right.
But this seems like if you were like if you're going to take COVID on a chart, right?
I'm certainly on the Packers.
And you were going to chart COVID,
probably heavy.
So like the vaccine, all the COVID. Where would you chart this right now? Is this like so? I think it's like making lower highs and lower lows, not the other way around.
Like so, hey, let's break this down. Let's focus on the weekly wager. We kind of set these up in order of plays. The ABC. Uncle B, you ready?
Weekly wager right now.
They are. Well, what are you thinking here?
But I think I just got my haircut today, and the guy told me he's all right. Fine, I go to a haircut.
Let's go. I'm gonna.
My wife picks them, and then I go there.
I'll go the other way. So
he's telling me that
I just have to trust Bill Belichick at home in this game. This line's telling me that sharp money. This isn't public money that's moved this thing this much.
A couple of my neighbors weren't leaving.
So I'm going to go with the smart money that's moved this thing.
That's a high.
I would try and search for 6.5 or 6. Get this thing below 7. But see play because of the spread movement is New England Patriots.
Right. And they're going to wear hats at the
Patriots and try to hunt down that spread.
I guess.
If you're in one of those states with the online legalized gambling where you can go DraftKings or one of the other services, you definitely could find that available potentially.
That's a good one. That's a really good one.
Lines nowadays, you'll see several different lines from different services on some of the lines makers. So you have the ability. In the old days, you would just have your one guy you go to, not many options.
I don't think lockdowns are going to work.
New England's the first pick, a C game for Uncle B.
The leadership we have right now.
What do you think?
Not going to be.
Why don't we do this? Why don't we put New England with Indianapolis?
So when
no one's going to follow.
You can take either one of those two
so
teams.
So I would tell you back in the Bay Area,
would you put equal units on those two
probably
games?
Going to go anyway, and one of my friends did not go, but they had an event that they scheduled before Omicron, and it ended up being like 80 to 100 people there, and I was not going to go. I couldn't go anyway because I was traveling because I came
to
Chicago.
You're
not getting crazy.
But, that was something that they kind of felt on the fence that they weren't even have it. They ended up doing a lot of it outside because it's California. It's a little bit warmer. But I can see, I was downtown Chicago last night. We went to go watch
Cleveland Browns.
With my kids. We went to go watch the Bears game in the establishment.
Plus the points.
And I can tell you that it was not that crowded.
Cleveland Browns plus 3.5.
And it's weird to not be crowded on a Bears game. Now, it is Christmas week, so other people maybe aren't going out or they're shopping or they're busy.
For that team,
but still, my brother told me who I was out with, and Joe, he said, no, there's not a lot going on down here. It's not as crowded as it normally is.
No, I would line
and so there probably is some fair. And I had a friend, so let me lead this to one more. I have a friend who works in bio. And he's a CFO of a company.
Situational and system type plays.
We talked about it, and he was telling me a lot about it. He knows a lot about it. Like when I listen to him talk about like the mRNA technology and everything they're doing.
And then what do you have for your
he cleared up some information for me on like Pfizer process of elimination form isn't exactly
why don't we do this?
Same thing as like what Moderna can do or what Shock can do, which is kind of interesting. But
we're going to take the weasel.
He's telling me based on what he's studying, he's probably getting way better information than you guys can get. He's telling me
I like it. You heard it. Uncle B's picks are in. And I'll tell you, I like that pick.
I'm not saying people are going to die, but I'm saying people are going to get sick. So whatever that ratio is, and it's because of these things like this event that I was supposed to go to that ended up having like 80 to 100 people.
Minnesota having a very tough
people are. I don't want to say people are doing the wrong thing because it's personal choice. But I think people are being defiant with the idea that hey, we're going to go out. I mean. AMC Theaters, right? That's stock.
You heard it. Those are the picks for the week in the NFL.
AMC Theaters did like some. They did millions of people went to the show this weekend
YouTube, please
to go see Spider-Man.
Button. We'll see you again next time.
Now, things that I want to do, things that I don't want to do. I don't really want to. My kids were asking me if I want to go see Spider-Man. One, I don't really want to go see that. Two, I don't really want to go sit in a theater. I don't know how you feel. I go to a restaurant. That's a little bit different to me than sitting in a theater.
I stopped going to theaters when people were talking about, like 10 years ago, and when people were talking about it, and like you couldn't get in a fist fight anymore. You get shot. So like,
right. But I don't think I'd go to a theater right now. But apparently a lot of people are just, I wouldn't say being defiant, but they're just taking the choice that, hey, if I get it, I'll get sick, but I'll be fine. It's like the flu. And maybe we need more.
Look at a college football game. Look at a professional football. It's like there's people everywhere. Everyone's going. It's like,
there's certainly
event, they're like, no, but they're still having the game.
Yeah, but Joe, there's certainly more people available in the stands that could play than there are players right now.
Right.
I mean, the NFL had to cancel and postpone a bunch of games. There's a game tonight, I think, that had to be continued. There was that from the weekend, and there's two games last night, and then there's the NHL is postponing their season temporarily. So it's, they're being, I think, what are we going to just do, have like a leap month and not do anything from December to January and then pray for warmer weather? I mean, that was the reality. The reality is
honestly,
if you're outside, it's better.
They're going to keep it to 2022.
Yeah, if you're outside, it's better. But anyway, hey, I think we should wrap on this one little Christmas show, Joe. Definitely. And happy holidays to everybody out there. If you're listening on YouTube, please hit the subscribe button. We appreciate it. Joe, have a safe Christmas. I know you're traveling with your family.
Yeah, you too.
And
had a great time.
And we will. I am going to make the push so that when we come back in the new year, we might have one more show next week, but New Year's, the push is going to be for some live streaming. So I'm glad that you got your haircut today. And it sounds like you got color too.
I'm ready for the camera. Yeah. No,
it sounds like you got some color treatment too, Joe.
I've earned these grades. Never.
All right. Well, thanks, everyone. Have a happy holidays, and we'll see you again next time on StockSmart.